Hello and welcome to the ADM Investor Services weekly market kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland. Today's panelists are Steve Freed, our Vice President of Grain Research, and Alan Bush, our Senior Financial Economist. My first question is for Steve. Are the grain futures overbought?
Well, I think that some people feel that they are. Some of the RSI information is near the highs, and the funds the last 3 days have bought about 40,000 contracts of beans, maybe as much as 30,000 contracts of corn. Since the low, funds have bought 200,000 contracts of corn, 130,000 contracts of wheat, 90,000 contracts of meal, and 40,000 contracts of beans. So usually funds do it in 3 days, and I think right now we need a little consolidation in the marketplace.
Okay. And what is the latest price range for nearby futures?
Right now we've had a shot in the arm in the Jan soybeans because of a big short had to get out today, but I think everyone's trying to figure out if we're in 1180 to 1250 range in Jan beans because of favorable South American weather and lower U.S. soybean export demand. In the corn, I think that people are kind of talking about the potential of a 580 to $6 range. In the March today we tested the 580 low, and I think if there's a South American problem, maybe down the road the March could trade as high as 625 to 675. Over in the wheat, there's just a lot of resistance in Kansas City December wheat at the 850 area. I think that eventually, if Russian exports slow, we could see a Kansas City March wheat test maybe the 875 to $9 area.
All right. And what are private analysts estimating for US 2021 and 22 corn, soybean, and wheat carryouts? And what market impact may that have?
For the corn, I think everyone is looking at like a 1250 carryout versus the government's 1493, and that's all with higher ethanol and export demand. For the beans, I think people are looking at a 400 carryout versus the government's 340. I think we've traded a lot of the surprise on the November report when they only increased the carryout 20 million bushels. So I think for corn, it's positive. For beans, it's negative. Wheat is a flip of the coin. Some people are as low as 570, others are high as 640, the government's 583, and it's all on export demand. And for the wheat, if Russian exports slow, then we could actually see our exports increase a little bit and our carryout drop.
All right, Steve. And moving over to the funds have added to open interest. How much is inflation driven, demand driven, or weather driven?
I think that for the beans and for the meal, that it's all fundamentals. The Chinese have stopped shipping lysine into the U.S., and that's 15% of the total rotation to feed animals, especially poultry and pork. So we've got to make up that difference. And we traded over the 200-day moving average for the first time since July in meal. So that's all fundamental. I think that in the wheat, it's all inflation. I think that the funds came in and bought after the CPI data came out at 6%. And in the corn, it's kind of a mix of both in that I think fundamentally supplies are tight worldwide, but the farmer could sell on a rally, and technically we're a little bit overbought.
Thanks, Steve. Moving over to the financials. Alan, will the recent increase in the consumer price index cause the FOMC to pull forward its schedule to hike its Fed funds rate?
Yes, I do. I think that is the case. Of course, recently we had the CPI coming in at a 31-year high, up 0.9% on a month-to-month basis, and that was 6.2% growth on an annualized basis. So yes, that has prompted calls for the Fed to move up the schedule to raise their Fed funds rate. Right now, it looks like there's very good probability that the Fed will increase its key interest rate at its June 2022 meeting. Of course, now the rate is currently at 0 to 25 basis points. So it looks like there is likely to be a 25 basis point hike to 25 to 50 basis points.
Okay. And Alan, what are the dominant fundamentals for the euro currency?
Well, in the euro currency, it appears that the ECB may be a little less hawkish than other central banks, including the Fed. Just today, we had ECB President Christine Lagarde saying that any tightening now could cause more harm to the economy than good to the economy. Of course, this is just after the Fed recently announced a tapering of its quantitative easing program. So interest rate differentials seem to be likely to undermine the euro currency further, especially at the expense of the dollar. So from here, I think the euro currency will weaken and the dollar index will continue to firm.
And last question, will Jerome Powell be reappointed as Federal Reserve Chairman when his term expires next year?
Of course, he does have a 4-year term. It will expire at the end of February, and whoever is nominated will require Senate confirmation. Now, incumbent Powell and Governor Brainerd have both been interviewed for the position. Most analysts now believe that Fed Chair Powell will be renominated, so that seems to be the consensus view that he will retain that position.
Well, thanks to both Alan and Steve. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, please visit admis.com. Thank you.